Assalamualaikum. Today we are from Group 2. We'll be presenting the financial statement analysis for Top Glove Berhad.
Assalamualaikum. My name is Rabiatul and I will present the background of Top Glove. Top Glove Corporation Berhad was established in 1991 in Malaysia by Tan Sri Dr. Lim Wee Chai with one production line and staff comprising 100 people. Top Glove Corporation has since become the world's largest manufacturer of gloves, commanding 26% of the world market share. Top Glove was listed on the Kuala Lumpur Stock Exchange or Bursa Malaysia in August 2001. Top Glove Corporation Berhad is a Malaysian rubber glove manufacturer who also specializes in face masks, personal care, and other medical products. The company owns and operates 50 manufacturing facilities in Malaysia, Thailand, China, and Vietnam. They also have marketing office in these countries as well as the United States, Germany, Vietnam, and Brazil. The missions of Top Glove is to ensuring safe human protection globally. Okay, now we move to industry analysis. Our group have choose to do SWOT analysis in Top Glove. So we go first to the strengths of the company. The first is digital transformation in medical equipment and supplies industry. The process of digital transformation are the first among industry. Digital transformation process for Top Glove Corporation includes a variety of objectives based on market maturity, customer technology acceptability, and corporate culture. Top Glove Corporation has successfully integrated the four key elements of digital transformation, which are digital integration in process, digital integration in marketing, and customer relationship management, and also digital integration into the value chain and using technology to investigate new products and market opportunities. Another strength is effective research and development. Top Glove Corporation has an innovative culture in which a significant portion of revenue is spent on research and development. As a result, Top Glove Corporation has been able to keep ahead of the competition in the medical equipment and supplies business in terms of innovative product release, outstanding customer service, extremely competitive pricing tactics, and excellent shareholder returns. For weaknesses of Top Glove, the product-dominated business model. Even though Top Glove Corporation has some of the most successful models in the medical equipment and supplies industry, this business model has made each new product launch extremely critical for continuous financial growth of the organization. Top Glove Corporation should strive to include more intangible value offerings along with its core products and services. Secondly, is high investment in technology. Top Glove Corporation needs to spend a lot of money on current machinery and hire more skilled workers in their manufacturing process. The machinery that was purchased was extremely expensive. As a result, machine maintenance is costly, and if any minor or significant accessories are damaged, the company will incur additional costs to repair them. For opportunities, the demand for glove increased. The global demand for glove is expected to expand by 8% to 10% every year on average. Medical gloves serve as a barrier of protection in the healthcare industry, particularly in developing countries. There is a growing awareness of healthcare and hygiene. Furthermore, the COVID-19 that hit the country have increased the production of gloves to be used not only for healthcare industry but also the citizen. Another opportunities is growth in the environmentally friendly product industry. Top Glove Corporation have introduced their biodegradable neutral gloves, which is powder-free, in conjunction with World Environment Day. This launch represents a significant milestone for Top Glove in terms of integrating sustainability into its business strategy that given the increased environmental consciousness and also demand for environmentally friendly product. And lastly, the threat to the top glove. The first threat to the business is high competition. Top Glove and Hatta Lega are the two leading manufacturers of rubber gloves. Previously, Top Glove was the largest producer by a significant margin, with Supermax, Cosens, and Latex partners serving as minor competitors. However, in recent years, another player, which is Hatta Lega, has grown in terms of market capitalization and has started to gain a lot of momentum. Then easy access to finance. This will reduce barriers to entry, placing downward pressure on costs as a result of more competition. Top Glove Corporation might take advantage of it by borrowing at a lower rate and investing it in research and development, and also capital expenditure to strengthen its core competitive advantage.
So this is the vertical analysis of statement of profit or loss for the ended 31st August 2021, 2020 and 2019 for Top Glove Corporation Berhad. The percentage column represented the vertical analysis, while the Ringgit Malaysia column represented the actual amount of SOPL. So for interpretation on vertical analysis of SOPL, based on the results above, the gross profit of Top Glove Corporation Berhad has increased drastically for 3 consecutive years, from 80.41% in 2019 to 39.38% in 2020 and to 67.86% in 2021. The increase in gross profit is due to a decrease in cost of sales. The cost of sales has suddenly decreased from 81.59% in 2019 to 60.62% in 2020 and to 32.14% in 2021. Meanwhile, for interest income, the item increased moderately in 2020 from 0.22% to 0.33%, and in 2021 from 0.33% to 0.38%. For other income, the item decreased from 0.80% to 0.46% in 2020. It is then increased to 0.51% in 2021. For distribution and selling costs, it has decreased materially in 2020 from 2.78% to 2.14%, and in 2021 from 2.14% to 1.55%. For administrative and general expenses, it has increased in 2020 from 6.12% to 7.61% and decreased to 5.86% in 2021. Meanwhile, the finance cost of Top Glove Corporation Berhad have slightly decreased from 1.68% in 2019 to 0.48% in 2020 and to 0.03% in 2021. For share of results of an associate, it has decreased in 2020 from 0.06% to 0.02%. Meanwhile, it stayed the same in 2021, which is 0.02%. For profit before tax, it has increased for 3 consecutive years, which are from 8.82% in 2019 to 29.92% in 2020 and to 61.33% in 2021. Profit net of tax increased tremendously from 7.66% in 2019 to 24.72% in 2020 and to 47.82% in 2021. Even though the income tax expenses also increased for 3 consecutive years from 1.17% to 5.21% to 13.51% for the years 2019, 2020 and 2021 respectively, the profit net of tax still increased due to other items of expenses that decreased significantly and its gross profit that increased a lot. This is the vertical analysis of statement of financial position as at 31st August 2021, 2020 and 2019 for Top Glove Corporation Berhad. For interpretation on vertical analysis of SOFP, firstly on total non-current assets. For total non-current assets of Top Glove Corporation Berhad, it showed a sudden drop from 68.72% in 2019 to 50.75% in 2020 and then increased slightly to 55.58% in 2021. Sudden drop in non-current assets from 2019 to 2020 is because of the sudden drop in PPE and its intangible assets. Slightly increase in non-current assets from 2020 to 2021 is due to its increase in PPE and investment property. In addition, the total current assets have increased substantially from 31.28% in 2019 to 49.25% in 2020 and then decreased slightly to 44.42% in 2021. The current assets increased substantially from 2019 to 2020 is because of its increase in investment securities for money market funds and its cash and bank balance. The decreasing of its current assets from 2020 to 2021 is because of the reducing amount in trade and other receivables, investment securities for money market funds, and cash and bank balance. Next, total current liabilities of Top Glove Corporation Berhad decreased moderately from 27.98% in 2019 to 24.49% in 2020 and to 22.47% in 2021. The current liabilities decreased moderately is due to decreasing in loans and borrowings. For non-current liabilities, the item decreased drastically from 27.11% in 2019 to 4.39% in 2020 and then decreased slightly to 3.72% in 2021. The non-current liabilities showed a sudden drop because of the amount of loans and borrowings that decreased a lot. As we know, reducing liabilities will increase equity. Since total liabilities of Top Glove Corporation Berhad is decreased, hence its total equity is increased. The total equity increased drastically from 44.90% in 2019 to 71.11% in 2020. It is then increased slightly in 2021 to 73.81%. The total equity increase is because of the increase in its retained earnings.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aida Nakiba and I'm going to present financial statement analysis of Top Glove Syndrome Berhad. First, we will look at the efficiency ratio. The first ratio is receivable turnover ratio. Receivable turnover ratio measures the efficiency with which a company is able to collect on its receivable or the credit it extends to customers. It can be calculated by dividing net sales with average gross receivables. Based on the annual report of Top Glove, the receivable turnover ratio of the company is rose sharply from 2019 to 2021, which is from 6.53 times to 23.97 times. From there, we can interpret that the company collects its receivables and convert it to cash 23.97 times on 2021. It means that the company was efficient in collecting their receivables. Next is inventory turnover ratio. Inventory turnover ratio is the number of times a company has sold and replenished its inventory over a specific amount of time. Based on the graph, inventory turnover ratio was increased from year 2019 to 2020 from 6.90 to 7.56 times. It shows that Top Glove has store sales where their stocks are depleting at a rapid pace. However, the inventory turnover ratio was declining from 2020 to 2021, which is by 1.28 times. Lower sales reflect weak sales for the company and declining market demand for the goods. Therefore, Top Glove needs some inventory analysis to discover the cause. However, even in 2021 shows the lowest ratio between year to year, but the company still shows a good inventory turnover ratio because the ratio is still in the ideal ratio that is between 5 and 10 times. Next ratio is asset turnover ratio. Asset turnover is a financial ratio that measures the efficiency of a company's use of its assets in generating sales revenue or sales income to the company. Based on the graph, Top Glove shows a good asset turnover ratio from 2019 to 2021 because the ratio for the 3 years is greater than 1, where the ratio is 1.23 times, 1.64 times, and 3.01 times for 2019, 2020, and 2021 respectively. It means for every 1 ringgit invest in fixed assets, a return of almost 3.01 ringgit is earned on 2021. And the higher the ratio, the better the performance of the company, because it shows the efficiency which a company is deploying its assets to produce their revenue. Now, we will move to liquidity ratio. There's gonna be 2 ratios that we're gonna choose, which is current ratio and quick ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. It can be calculated by simply divide the company's current assets by its current liabilities. So the concept is that if the company has current ratio more than 1 times, then it has more current assets than current liabilities, which is good because creditor would consider the company is at low risk as they are able to pay out its short-term obligation. So the current ratio of Top Glove is increasing in 2020, which is from 1.12 to 2.01 times, which is good for the company. However, it is slightly decreased in 2021, which is from 2.01 to 1.98 times. Although the trend was decreasing, the company still could maintain its current ratio more than 1 times. It means the company is able to settle its debt and payable by 1.98 times during the year 2021. Now we are going to look into the quick ratio. Quick ratio is a calculation that measures a company's ability to meet its short-term obligation with its most liquid assets. It is almost same with current ratio, but quick ratio is more conservative measure of liquidity because it doesn't include inventory in its calculation. Same like current ratio, if the company has quick ratio more than 1, it is usually considered less of financial risk as it has enough asset to meet its short-term debt. So as we can see, the quick ratio from 2019 to 2020 it significantly increased from 0.72 to 1.76 times, but decreased in the year 2021, where it is decreased by 0.3 times. The lower the ratio, the more likely the company will struggle with paying debts. However, a result of 1 times is still considered to be the normal quick ratio. For instance, a quick ratio of 1.46 in 2021 indicates that the company with 1.46 ringgit of liquid assets was still available to cover each 1 ringgit of its current liabilities, even the ratio is lower than previous year. The next ratio is leverage ratio, which consists of 2 ratios, debt ratio and debt to equity ratio. Debt ratio refers to a financial ratio that measures the extent of a company's leverage. The higher the ratio, the greater the degree of leverage or financial risk. Debt ratio is calculated by dividing the amount of total liabilities with amount of total assets. Based on the graph, the trend of debt ratio of Top Glove keep decreasing from 2019 to 2021, which is from 55% to 26%. Thus, we can conclude that Top Glove was in a good condition as it has more assets than debt. Normally, a debt ratio that less than 50% is considered good and healthy. And the lower the ratio, the better it is. Furthermore, it also indicates that the company may not be at risk of default on its loan if interest rates suddenly rise. Overall, Top Glove will perform well as it has a better solvency ratio. Debt to equity ratio. Debt to equity ratio is a measure of the relative contribution of the creditors and shareholders or owners in the capital employed in business. It reflects the ability of shareholders' equity to cover all outstanding debts in the event of a business downturn. We calculate the ratio by simply divide the amount of total liabilities by its shareholders' equity. From the graph, we can see that the debt-to-equity ratio has been declining for 3 years, which from 123% to 35% quickly. It indicates that Top Club was in a good condition, as it has become less risky. Furthermore, investors will find a company with low risk to make a better investment because the lower the ratio, the less risky the company faces.
Assalamualaikum warahmatullahi wabarakatuh. My name is Najiha Beti Johari, so I'm going to present the profitability ratio. So, there are 5 ratios that will be discussed later. The first one is net profit margin. So, net profit margin measures the company's ability to generate earning after all expenses and taxes. Second one is return on asset. It measures how effective the company is deploying the assets to generate profit. The third one is return on equity. It measures the company ability to earn a return on its equity investment. The fourth one is total asset turnover. It measures the efficiency of the company asset in generating sales. And lastly, operating income margin. For every ringgit ratio of revenue generated, how much is left after deducting cost of sales and operating expenses. In 2019, net profit margin of Top Glove is 7.66%, while in 2020 it's 24.70%, and in 2021 it's 47.82%. From the line chart, we can see that there is a significant increase by 40.60%. A higher net profit margin means that Top Glove is more efficient at converting sales into actual profit. The net profit margin of Top Glove is increasing is due to the huge volume of sales. This is because in 2020, the net sales and the net profit are increased because of pandemic COVID-19. While in 2021, the raw materials declined by 10% and 6%. Thus, the price of nitrile latex is low. Next is total asset turnover. In 2019, it's 0.87 times, while in 2020 it's 1.01 times, and 2021 is 1.77 times. For the line chart of total asset turnover, we can see that it increases by 0.9 times. For this ratio, a higher ratio is favored because it shows the company is efficient in generating sales from its asset base, meanwhile lower ratio means the company is inefficient or use more capital-intensive approach. This means Top Glove Berhad is efficient in using its asset to generate sales. Next is return on asset of Top Glove Berhad. In 2019, it's 6.67%, while in 2020 it's 24.85%, and 2021 is increases to 84.64%. From the figure, we can see that there is a significant rise by 77.95%. A higher return on asset indicates that Top Glove Berhad is efficient and can earn money with a smaller investment. Top Glove Berhad generates revenue growth mainly because of the success of its investment in assets and has no problem in collection due to the amount of the receivable decreasing throughout 3 years. The fourth ratio is return on equity. In 2019, it's 40.84%, while in 2020 it's 40.91%, and in 2021 it's 160.84%. From the figure, we can see that the ratio increases dramatically to 160.68%. A higher ratio is better because it shows a company is effective at generating profit from its equity financings. In my opinion, this may due to the wise reinvestment decision. The last one is operating income margin. In 2019, it's 12.37%, In 2020 is 31.77%, and lastly is 2021 is 62%. From the line chart, we can see there is upturn occur from 2019 to 2021. So a high operating income margin is a good indicator that Top Glove Berhad is earning money from business operation to cover all the costs associated with running their business. So the cost of high ratio is because of the increase in sales. So the net sales increases by 11,560,304 ringgit from 2019 to 2021. Next is cash flow analysis of Top Glove Berhad. From the table, it shows that the net cash generated from operating activities, positive figures, and increasing from 2019 and 2021. Meanwhile, investing and financing activities show the negative figures. And cash equivalents increases significantly in 2020 and decreased slightly in 2021. So the analysis for operating activities is Top Glove Berhad's core business activity is prospering. It means the company also can cover its day-to-day operations. Next is investing activities. It shows that Top Glove Berhad investing in its long-term assets. So this will help its future growth by acquiring the assets. The third one is financing activities. Top Glove Berhad is profitable as it could pay the dividend off to the shareholders. Lastly, cash and cash equivalent. The positive cash flows specify that Top Glove Berhad's liquid assets are growing, allowing it to cover obligation, reinvest in its business, return money to shareholders, pay expenses, and provide a buffer against future financial difficulty. That's all for me. Thank you very much.
Now, let's jump to the short-term future prospects that has been planned by Top Glove. Based on the SWOT analysis, Top Glove Berhad needs to maintain and improve a few crucial aspects for its company growth in 2022. The group anticipates that the solid global demand would increase by an estimated 25% and 15% year-over-year for 2021 and 2022 respectively. In accordance with the current global situation, Top Glove also anticipates a structural increase in glove usage since the epidemic will hasten the gap between glove consumption in developed and emerging regions to close. Besides, the firm is optimistic that the demand for gloves will maintain its upward trend and rise between 10% and 15% annually as a result of increased knowledge and hygiene standards in both the medical and non-medical sectors. Since the pandemic becomes endemic now and the globe begins to live with COVID, Top Glove has taken initiative to further enhance forecasting and disclosure on potential COVID impacts to the organization for them to be able to cater with the increased demand in the market. Other than that, Top Glove are planning to maintain its R&D spending and use cutting-edge technology to re-engineer its procedures for higher level of product quality, effectiveness, and innovation. Not only that, Top Glove will begin to address short-term and long-term liquidity and funding risks as their priorities for financial year 2022. Under the environmental part, specifically on waste and effluent, the short-term target is to reduce water intensity by 3% to 0.157 kg per 1,000 pieces gloves by 2022. Not only that, reduction of scheduled waste from licensed landfill will be diverted to 5% only by financial year 2022. As for water management, with regards to in-house water recycling facilities, Top Glove short-term target would be to reduce municipal water consumption intensity by 10% to 0.107 cubic meter per 1,000 pieces gloves by 2022. They would also opt for the decrease of electricity consumption intensity by 11% while reducing natural gas consumption intensity by 13% in financial year 2022. In terms of social work, under occupational health and safety, training is continuously conducted in Top Glove in order for them to enhance employee safety awareness and prevent unwanted accidents or incidents from happening while working. Therefore, Top Glove came out with a plan to reduce accident rate by 9.5% per 1,000 workers in financial year 2023. Lastly, in terms of contributing to sustainable development goals, Top Glove came out with a short-term target for financial year 2022 and financial year 2023, where the group would invest in additional solar power implementation across 19 factories in 2022 and 2023 in Malaysia, Thailand, and Vietnam. Overall, we can say that Top Glove has been properly planning their short-term future prospects in order for them to increase their profitability in the next financial year while improving on the sides that they are lacking for better. Last but not least, for conclusion, in general, we can say that industry analysis refers to the analysis of surroundings which helps guide the industry to expand and survive in a competitive environment. We use SWOT analysis as the main tools to perform industry analysis of Top Glove and discover that Top Glove's strength is in the area of digital transformation, in medical equipment and supplies industry, and also the strength in effective research and development. As a result, Top Glove Corp has been able to keep ahead of the competition in the medical equipment and supplies business in terms of innovation product release, outstanding customer service, extremely competitive pricing tactics, and excellent shareholder returns. However, high investment in technology makes it difficult for Top Glove to reduce its production cost according to the demand in the market, since the machinery purchase was extremely expensive and the cost to repair them is also high. Threat of new competitors has also shaken the position of Top Glove as one of the largest glove producers in Malaysia. In recent years, another competitor, which is Hartalega, has grown in terms of market capitalization and has started to gain a lot of momentum by being largest producer in nitrile gloves. Despite the challenging business environment, Top Glove is well prepared. This is due to the strong cash flow reserves that the group has developed over a long of financial year 2021 will allow them to finance further expansion and take advantage of accretive management and accounting opportunities when they present themselves. That's all from us. Thank you for your attention.